Hold on tight, because the news is coming at you fast. A Tesla on autopilot just crashed through a dance studio, injuring 3 people. The investigation is underway, and questions are flying about the safety of autonomous driving. But that's not all for Elon Musk's company. After massive backlash from over 3,000 European owners, Tesla is now offering FSD V14 Lite for HW3 vehicles, a stripped-down version of full self-driving. But will it be enough to appease frustrated customers? And the Tesla news doesn't stop there.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Now, let's talk money. Narwhal Capital Management just significantly cut its stake in Tesla, selling off nearly 31% of their shares. A $2.96 million move that's raising eyebrows on Wall Street. But they aren't alone. CFO Vaibhav Tanja and Director Kathleen Wilson-Thompson both recently sold off substantial portions of their own Tesla stock, totaling over $20 million. Is this a sign of a shifting sentiment towards the electric vehicle giant? We'll break down the details. And the investment world keeps turning. Analysts are buzzing about Tesla, with ratings ranging from buy to hold. But what are the key factors driving these opinions? Plus, we'll dive into Tesla's latest earnings report, where they beat estimates by a hair, but revenue fell slightly short of expectations. We'll unpack the numbers and what they mean for the future of the company. Finally, if you're a Tesla enthusiast, this one's for you. Tesla is releasing limited edition signature models of the Model S and X, but with a catch. A strict no resale agreement with a $50,000 penalty. They're trying to prevent flipping, but is this move fair to buyers? We'll explore the details and what it means for the future of these iconic vehicles. Don't miss a single update, hit that subscribe button, ring the bell, and stay tuned for all the latest. A Tesla operating on autopilot crashed into a dance studio in Clinton, North Carolina, resulting in injuries to 3 individuals. Details surrounding the incident remain limited, but authorities confirm the vehicle was engaged in autopilot mode at the time of the collision. The extent of the injuries sustained by those inside the dance studio is currently unknown. This crash adds to the growing scrutiny surrounding Tesla's autopilot system and its safety features, prompting renewed questions about the technology's reliability and the responsibility of drivers when utilizing such advanced driver assistance systems. Investigations are underway to determine the precise cause of the crash and whether any malfunctions contributed to the incident. Further updates will be provided as they become available. Tesla is facing mounting pressure and potential legal action over its full self-driving feature, following Elon Musk's recent admission that older Hardware 3 vehicles may not fully support the promised functionality. Over 3,000 European owners are reportedly considering legal action after Tesla previously stated that HW3 cars would eventually receive FSD. In a move to address this backlash, Tesla has announced it will offer FSD V14 Lite, a scaled-down version of the full FSD system, to HW3 owners. While both versions remain Level 2 driver assistance systems requiring constant human supervision, details on the specific differences between FSD and FSD V14 Lite remain unclear. The rollout will prioritize U.S. customers, with a planned commencement by the end of June. However, international customers, particularly in Europe, are likely to experience significant delays, potentially waiting months or even a year for access. Musk previously proposed a solution involving microfactories to retrofit HW3 vehicles with newer Hardware 4 chips and cameras, but the feasibility and cost of this undertaking remain uncertain. Concerns are also rising about whether HW4 vehicles will ultimately face similar limitations, given Tesla's recent announcement of a new, upgraded car computer architecture. Tesla, Inc. Nasdaq TSLA is experiencing shifts in institutional and insider investment. Narwhal Capital Management reduced its Tesla stake by 30.8% in the fourth quarter, leaving them with a $2.96 million position. However, other investors like Net Worth Advisors, Davidson Capital Management, Turning Point Benefit Group, Manning and Napier Advisors, and Prism Advisors all initiated or increased positions in Tesla during the third and fourth quarters. Institutional investors currently own 66.2% of Tesla's stock. Recent insider activity shows significant sales. CFO Vaibhav Tanja sold 2,264 shares for approximately $898,876, reducing his ownership by 11.11%, while Director Kathleen Wilson Thompson sold 25,809 shares for nearly $9.27 million, a 43.25% decrease in her holdings. Over the last 90 days, insiders have sold a total of 53,804 shares, valued at over $20.86 million, representing 19.9% of the company's stock. Tesla's stock opened at $376.02 on Wednesday, with a 52-week range of $270.78 to $498.83. The company's market capitalization stands at $1.41 trillion. Recent earnings reports show 41 cents per share, exceeding analyst estimates of 39 cents, with revenue of $22.39 billion, slightly below the expected $22.96 billion. Analysts forecast $1.32 EPS for the current fiscal year. Analyst ratings remain mixed, with 19 buy ratings, 16 hold ratings, and 6 sell ratings, resulting in a consensus rating of hold and a price target of $398.42. Roth MKM, Canaccord Genuity, Piper Sandler, Wedbush, and William Blair have all recently issued reports on Tesla, with price targets ranging up to $600. Tesla designs, manufactures, and sells electric vehicles, energy generation, and energy storage products, aiming to accelerate the world's transition to sustainable energy. Tesla is set to discontinue production of its iconic Model S and X electric vehicles, marking a significant shift in focus towards its Optimus humanoid robot project. To commemorate the end of an era, Tesla is producing a limited run of 350 Signature Edition models, 250 Model S and 100 Model X, exclusively offered to existing Tesla owners. However, prospective buyers planning to quickly resell these sought-after vehicles for profit should be aware of a new restriction. Tesla is requiring buyers of the Signature Edition to sign a No Resale Agreement, prohibiting resale within the first year of ownership. Violators face a hefty penalty, either $50,000 in liquidated damages or the entire resale value of the car, whichever is greater. Furthermore, Tesla reserves the right to deny future vehicle sales to those who breach the agreement. This measure aims to prevent speculative flipping, given the limited production run. While unforeseen circumstances may necessitate a sale within that year, Tesla's agreement allows it, but only with prior written consent. In such cases, Tesla has the first right of refusal, offering to repurchase the vehicle at the original price, minus deductions for mileage, wear and tear, and restoration costs. Only after declining to buy the car will Tesla provide written consent for the owner to seek an external buyer. This isn't Tesla's first attempt to control resale. A similar strategy was previously employed with the Cybertruck, but later abandoned. Whether Tesla will strictly enforce this new agreement remains to be seen.